Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of stock index futures. I'll start with the UK FTSE futures. An outside day yesterday, and also a bearish dark cloud cover pattern as the market once again tested the overhead upper time resistance, currently at 70.65, of the broken but still seemingly effective December 2020 to late January 2021 bullish shift pitchfork, and was promptly rebuffed by it. Prices found some light yet adequate support from the gently rising short moving average, currently at 70.02, but the better support will be from the top of the old broken rising wedge pattern, currently at 69.62. As I've recently oft mentioned, it seems there are a lot of contradictory and odd forces at play here, even if the trend seems to be gently higher. Further below, we have the January high at 69.10, as well as the rising short medium moving average, currently at 68.68, and its partner, the uptrend, currently at 68.63. That made up actually the lower trend line, the old January to March sideways triangle. Meanwhile, overhead, we have the May high at 71.43, next to the lesser projected Fibonacci level at 71.42. And with the 50% projected Fibonacci level a little higher at 72.14. So far today, a lower opening with the base once again on the short moving average, but just be wary of the slowdown ahead of the upper time. German DAX futures. Another new all-time high yesterday, yet also a bearish harami at the same time. This has all to do with the nearby overhead 50% projected Fibonacci level at 15.629 that has capped the market since mid-April. The move up originated, as have all the moves up in May, from the compound weekly key reversal up made in the first 2 weeks of May. Meanwhile below, we still have the rising short medium moving average, currently 15.097, and its partner, the late October 2021 to date uptrend, currently at 15.033. Anyway, the potential is still there for a try higher, possibly towards target X1 in the 15,800 area, a more recent topside target for the small diamond continuation pattern. However, in between we still have the projected 50% Fibonacci level. And as a final thought, the last 2.5 weeks action could be seen as a possible ascending triangle. More on this shortly. Should this develop. So far today, higher open, but then a move lower into the mild congestion between 15,400 and 15,440, though it isn't that much of a move lower as yet. US E-mini S&P futures. Bearish black crow yesterday, that was also the 4th highest high of all time. This bearish reaction was the market's move to the previous session's key reversal up and close over both the 50% projected Fibonacci line at 41.83 and the broken lower time, currently 41.84, and that's of the December 2020 to early February 2021 bullish Andrews pitchfork. It was also, early on, an attempt to push up through again the overhead 100% projected Fibonacci level at 42.02 and failing. All this continues to be a microcosm of the bigger picture, a fractal interpretation, if you will, of what else is going on. It shows the depth of indecision that this market has undergone since early April. Hence, even the immediate countering weekly key reversal down we saw 2 weeks ago is still indecisive, purely because of the way it was expressed through market actions. This is one worth continuing to keep a close eye on, even more than before, especially as we seem to be stabilizing over the broken lower time. So far today, higher open over both the 50% projected Fibonacci line and the lower time, getting caught up on top by the 100% projected Fibonacci line. French CAC 40 futures. The second highest opening ever, plus the third highest high ever yesterday, but also a combined bearish dark cloud cover pattern and bearish closing black Mariposa as well. All this action is in the frame of last week's weekly key reversal up. However, it seems the market is really having a hard time trying to move that extra bit higher to make a new high. As a point of housekeeping, I have decided to retire the December 2020 to January 2021 bullish Andrews pitchfork and the late January to late March bullish shift pitchfork. their utility has come to an end. I might actually draw a fresh bullish shift pitch walk for the late February to late March action, but that will be for next time. Meanwhile below, the market has support from the 50% projected Fibonacci line of 61.17, and so far today, higher open, though well within the main body of yesterday's action. The move looks very much like a bearish harami right now, in between the 50% projected Fibonacci below and the high of the market at 64.18. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.